Recently released fourth quarter and full year 2010 reports for the property sector revealed a continued fall in sales and lease rates for offices, villas and apartments here in Dubai. With the Emirates economy forecast to grow by 4.6% this year, what can we expect from the property sector this quarter and the year ahead? Well, to discuss this further, we are joined by Matthew Green from CB Richard Ellis, Middle East. Hi, welcome to the show, Matthew.
Thank you for having me.
Now tell us about your report, fourth quarter market overview. Tell us about your key highlights.
Okay, well, what we saw during the final quarter was a continuation of trends from the rest of the year. We saw a 9% decline in our CBD office rents, and we also saw a 4% decline in apartment rates as well.
Looking at DIFC, they announced to reduce their annual base rental rates from January onwards. Will that spur demand, you think?
Yeah, it's certainly a significant change, and that kind of goes hand in hand with other regulatory changes that were made during the quarter. I think what we can expect to see then is more affordability and more competitiveness within Dubai as a region for financial centre companies, but also we can expect to see some increased demand within the state moving forward.
But as, in DIFC there isn't much availability anyway, right?
Yeah, well, certainly from the DIFC managed buildings, the vacancy rate there is probably less than 5%. Yeah. It's a bit different within the private managed buildings, so I think a lot of the movement in terms of new tenants coming in may start to see that within the privately managed buildings. And we know there's a number of occupiers who have DIFC licence that are still outside of the estate, so they'll be moving in soon.
Secondary and tertiary office rates have gone down quite a bit, by 33% last year. Will rates go down further?
I think we can expect to see some further declines. I think the main issue for secondary locations is actually the affordability that we're now seeing within the CBD. The area from Interchange 1 down to kind of Burj Dubai area, that has now become so much more affordable that those tenants who were previously looking outside of the CBD are now moving back in.
Let's look at residential property, apartments and villas. Their lease rates have gone down quite a bit also this year. What's the bottom there? Or have we reached it already?
I don't think we've reached it yet. We have obviously significant new supply coming through over the next couple of years. In 2010 we saw a 17% decline for apartments and a 13% decline for villas. So I think some similar stories along those lines for 2011, although not quite as pronounced.
Can you tell us what are the most popular areas at the moment in Dubai?
I mean, any area which has developed community facilities is really proven to be popular. So Dubai Marina, the Emirates Living and downtown, all with very well developed retail and leisure facilities. These are the ones which certainly the expatriates want to be in.
Tell us about the supply and demand ratio here in Dubai.
Okay, well, 2011 is going to see 27,000 new units come through, and that's split roughly 80% apartments versus 20% villas. A similar situation for 2012 with 80%, 20% and about 21,000 new units coming through.
So quite a number. Thank you.
Significant supply still.
For coming in today, Matthew.
No problem.
Have a good day.
Thank you.
Well, that's it from the business desk. Up next, Laura Bockwell is back with the news.